And that's a wrap. You've made it to the final stage of the Blueprint Strategy program. A huge milestone in your trading journey. By now, you've built a strong foundation in establishing a fundamental bias and effectively timing your technical approach. As we step into this final practical application, I encourage you to revisit key sections of the program. Sometimes even an extra 5% of insight can translate into a 5% improvement in your trading decisions. Small refinements can lead to significant long-term impact. Let's dive into the final practical application and bring everything together. Ladies and gentlemen, welcome back to the final stage where we are now putting everything together that you have just learned during the Blueprint program. And I'm also back on the charts. On the same trade example, remember the euro-dollar trade example that I showed you during the introduction sessions when we talked about, hey, what it takes to be a good trader. And we are going to come back now to the same trade example. When we talked about what it takes to be a good trader, most likely you felt a little bit intimidated or even overwhelmed about the things that I was talking about. But now when you look at the chart and see all the tools that you have learned about and seen during now the Blueprint program, now things should become a little bit clearer. All right, so without further ado, let's jump into the chart. Now, let's start with our two-step mechanical process. Remember, step one, we are looking at fundamentals, our fundamental tools. What are these tools? Seasonality, valuation, and CUT index and CUT net indicator. And with these tools, we are using to get a fundamental bias. And then only if we have a fundamental bias, really important. If we have a fundamental bias, if we are bullish or bearish, then we are moving to step two, to time the market with technicals, in other words, with supply and demand. But let's first get a fundamental bias. Now, let's look. So what do I usually look at first? Is it valuation, seasonality, CUT index? Usually what I do is during Saturday, because this is when I'm based in Dubai. So usually on a Saturday morning, this is when the CUT data is getting released and the indicators are getting updated. So Saturday morning, the first thing that I'm going to do is see if there are any changes in the CUT indicator, in the net indicator. And obviously, and based on the CUT net, the CUT index is getting calculated. Now, what I want to show you now, and we open for that, we do full screen, the euro dollar here on the weekly chart. And what we can see here, so we're looking at the CUT net indicator, not the index. And for currencies, I'm really interested on what the retail traders are doing. Are the retail traders bullish compared to their previous behavior or bearish compared to the previous behavior? And what I can see here now, well, I'm looking for spikes. And if I'm here right now, you see I'm simulating that I'm like on the around end of September 2024. And whenever the retailers are getting really bullish compared to their previous behavior, you see that here, you see that also here, you see that here, you see that here. Whenever they spike up, then you see that basically price is going to go down. Remember, this is a weekly chart, so every single candle is a weekly candle. So what this tells me is that when retail traders are getting bullish compared to their previous behavior, price is about to drop because retail traders are usually wrong. Especially, now we're talking Forex, especially in the Forex market, retail traders are usually wrong. And what we see here, retail traders right now are very bullish compared to their previous behavior. It's always important that we compare it to their previous behavior. So they're coming from relatively bearish, actually very bearish, and then price rallied, and now they're really bullish. So This gives me the first clue. Now, retailers are already really bullish here compared to their previous behavior. What I'm also interested in Forex is the fund managers. Because remember, the fund managers, they are tracking price. So they should look like, you see the fund managers, this should look exactly like the trend, like the price movement. When price is bottoming, the fund managers are rallying. And when price is topping, fund managers are dropping. So they are tracking price, they are trend followers. And now, what you see here is what I call already a small divergence. I show it to you here. Now, you had here the low, basically. You see here the high. And now, it looks like, and I make this a little bit bigger, so you can see it even better. Price is looking to make a new high, or at least an equal high. But look what the fund managers are doing. They are not at the same level that they were before. They're actually selling. You see that? And this is what I call, or we call, a negative divergence. It's already setting up. Price is attempting, or even you see that here, price actually made already a new high. Price made already a new high here. But the fund managers, they didn't make a new high. They actually made a new low. So it's a divergence, a negative divergence, meaning that price is about to drop as well, because price is following the behavior of the fund managers here. So another clue for price to eventually, that rally, what I would call a fake rally, the price is about to drop here as well. Now, we could also look at users and producers, and you see they're also, well, bearish here. But when it comes to Forex, this is something that you have to backtest yourself at some point of time to see, hey, for agricultural markets, for instance, or for commodities, the users and producers are really important. For Forex, not so much. For Forex itself, I like to use retail behavior and fund managers, and these are two rules that I like to have in place for a high probability trade. Meaning, the retailers are doing the opposite here. They are bullish, and we want to short potentially. And here we see a small but already a valid divergence on the hedge funds. Now, I'll add for you guys now a little nugget here. And since we are looking currency, and I'm teaching you this now, I also want to see what the US dollar is doing. Because remember, we are looking at the euro-US dollar, so we can also look at the US dollar itself. And the US dollar itself is not a currency, it's a basket full of currencies. And since it's a basket, the dominant driver of that basket is the euro. Roughly 70% of that basket is the euro. And that's why we have a negative correlation. So I'm also obviously very interested to see, hey, what is the dollar doing in this case? All right. Now, if I look at the retailers, and I want to show you this example because it's insane. I want to show it to you here. The retailers. During that time, you see here, same time frame. Make this a little bit bigger. During that time frame, here we go, right? So end of September 2024, the retailers, now let me put here, and that's why I like the net, to look at the net first.
So I see the very, very, very extremes. So looking at the very extremes, the retailers, what does it tell you here? If I look back, now 2024, they are very bearish, obviously indeed. But when was the last time the retailers were that bearish? Not in 2023, not in 2022, not in 2021. Well, the last time they were that bearish was in 2009. So basically 15 years ago. So we are the most bearish since 2009. So what do you think if we said the retailers are usually wrong, actually most of the times wrong, especially in the Forex market? If the retailers are now very bullish on the euro and they are very bearish, actually the most bearish in the past 15 years on the dollar, what do you think is going to happen with the dollar if the retailers are the most bearish in the past 15 years? So obviously I hope you have the answer. If you have the answer, then you learned already quite a lot in the Blueprint program. So I hope you will all have the same answer, that price is about to rally on the dollar and on the other side to drop on the euro, because we have that negative correlation. Now let me go back to the euro. Now we could obviously also look at the COT index, but if we know that the retailers are very bullish, you see that here on the index itself as well. They are above the green horizontal line, so you know that they are very bullish as well. This is where we want to have them. But we analyzed that already on the COT net. Now what about the rest of our tools? Valuation. Now when it comes to valuation, we could look at valuation versus the dollar. We could look at valuation versus interest rates, and we could look at valuation versus gold. In this case, when it comes to currencies, I only want to see valuation versus the dollar. It makes a lot of sense. We're looking at the euro dollar, so I want to see if we are either overvalued or undervalued versus the dollar. And you see here, we are pretty much around the mean. We are not overvalued, but we are also not undervalued, which is okay, which is kind of neutral. Ideally, we were overvalued, and you see once we are overvalued, we are getting these nice, you see that here, once we are overvalued, we're getting these nice drops here. Look at this, overvalued, we're getting a nice drop, overvalued, we're getting a nice drop, overvalued, we're getting a drop. But here in this case, we are not overvalued, we are neutral, so that's fine as well. At least we are not undervalued, right? And we would have contradictive, quote-unquote, signals, but in this case, it's just neutral. Now let's look at seasonality, and I'm having here 10-year seasonality. I've put a horizontal line here. You see basically we are making a top now on the euro, and the forecasting of the tool is telling us, well, short euro basically now. And look at this, It's showcasing not only a small drop, a big drop, even into, well, you see that even into December. Now, we just analyzed now the markets based on our fundamental tools. Remember, so now in the Forex market, we like to look at retailers. Retailers are super bullish on the euro, extremely bearish on the dollar. We have a divergence, a negative divergence on the hedge funds, the fund managers. We have valuation neutral, and we have seasonality in our favor. We have seasonality going down. All right, so we have most of our rules met. So do we have a fundamental bias? I would say clearly yes. So now, since we have a fundamental bias, we can go into step 2, which is timing the market with supply and demand. Now, since I like my entries are usually on a daily chart, so I like daily entries, so that's why we do weekly income, or you can call it also swing trading, whatever you are familiar with. And now we start on the weekly chart here. And on the weekly chart, we see that, well, Here is a supply zone which has been tested couple of times, but at the end of the day, well, the way how I'm doing this now very, very advanced, we have basically here level on top of level that is overlapping here, so it has been tested here just a little bit. And so you see, so this is my entire location very high. So you have here that overlapping level on top of level where we are in right now. We haven't dropped from that area just yet. We are literally, as we speak, in that area. And so from that area now, I'm going into the daily chart here, and on that daily chart now, I put here a horizontal line, and I go to the left, and what do I see here? I see a very nice, so everyone who now watched the Blueprint program should see that rally-based drop. And you see also that the wider version has been tested, and the wider version gave a reaction already, but not the preferred version. So you can still, in this case, for me, because I have such a strong fundamental bias. Look at the dollar. The retailers are the most bearish in the past 15 years. I have such a strong fundamental bias that I want to get into the trade. But I don't want to just jump in. I still want to time the market based on supply and demand. So we are in a weekly supply zone. And now we find, well, we just apply the big brother, small brother principle. And here we have a nice supply zone as well. Could you just trade again the wider version that has been hit here already? Yes, but to refine the zone, let's do, because it has been tested already, let's use the preferred version. And then we put stop loss as well. We could put a 1 to 4 target, 1 to 3 target, whatever you want to do. 1 to 4 would be here. But what about trend, by the way? What about trend? Now, we can also quickly look at trend. This might get a little bit complex, because if I look at the daily chart, we have a clear, and I'll show you that on, let me show you that on this chart here quickly. You see, on the daily chart, we have a clear uptrend. On the weekly chart, what do we have here? We have a low, a higher low, but then here it breaks again, and if we are higher low, higher low. Even here on the weekly, we could argue we have potentially already an uptrend in place with here a low, higher low, and here high, higher high, higher high. However, now if I do apply, for example, if I was already very advanced and I could apply anticipatory trend analysis, I would know that, I could anticipate that the euro, look at this, on a monthly chart, high, lower high, lower high, lower high, lower high, lower high, low, lower low, lower lows, and lower lows, so that we are basically, and then remember, the pressure in a downtrend comes from above, that we are in a downtrend, in a big long-term downtrend on the monthly chart. And I don't see any reason why we would not here continue, respect that downtrend on the monthly chart. So we are still here in a very strong drop-based drop monthly. We are just right now in. So you would expect the price continue to the next monthly demand zone, which is all the way down here. All right? Now, let's see what happened. So, now, I want to just simulate this now and just give you a few days. And I want to again point something out. Let's add 1 week here. You see, price took a whole week, and the final day of that whole week, you had to wait a whole week for price to come into the zone, and then now it's reacting from that preferred version. Again, patience, ladies and gentlemen. Patience is required here. And now we add today, and you see the rest is basically here. History, it would have hit our target. We could have even traded for a bigger target, but sometimes it's like a should have, could have, would have scenario in trading. In hindsight, we are always the best traders. But if you took a 1 to 4 here, absolutely magnificent. All right, guys. So again, 2-step mechanical process. This practical application clearly showed you the power of getting fundamentally biased. You get first fundamentally biased. If you don't have a bias, if you have contradictive signals, then you move on to the next market. And if you have a fundamental bias, bullish or bearish, then you move to step 2 to time the market. Well, if you're bearish, you're gonna short the market. You find a supply zone ideally. My first rule is always it has to meet the big brother, small brother principle. That's my first rule to go for. And then freshness as well. These are my 2 most important rules, by the way. And then maybe a leg out as well, a very strong leg out. But if the big brother and the small brother principle is met, and if the zone is fresh, you're ready to go. You're fundamentally biased, you're covered by higher time frame demand or supply, and the zone is fresh, and then you can place the trade. Again, this was kind of advanced, so I showed you already how I do it for myself, literally how I get into trades. So this was already a little bit more advanced, but I guess also digestible. For everything else, you have to practice, you have to backtest, you have to see how the tools work on different markets, on different assets. And then you have to get into trades and then also log your trades, journal your trades, and then see how it goes. All right, ladies and gentlemen. Thank you for watching the practical application session. Thank you for watching the entire Blueprint program. See you next time in my Funded Trader Weekly Outlooks. Talk to you soon. Bye-bye.
All right, that concludes the Blueprint Strategy program. I hope you've taken the time to thoroughly watch the entire program and make detailed notes. As mentioned earlier, it's highly beneficial to revisit certain sections or even the entire program. Even gaining an additional 5% of insight on a second viewing can lead to a 5% improvement in your trading decisions. An improvement that can have a significant impact over time. Since 2017, I've developed and refined the Blueprint Strategy program to help you achieve 2 key objectives. A, establish a strong fundamental bias in any market, and B, leverage that bias to effectively time the market using our supply and demand technical approach. But your journey as a trader does not end here. We offer daily live practical application classes, providing an opportunity to ask questions and deepen your technical and fundamental knowledge. In addition, we offer daily live trading classes where our mentors share their trade ideas with you. These sessions provide an excellent opportunity to develop your skills and begin earning as you continue to learn. Every session is recorded and available for you to watch at your convenience. Our comprehensive support system is designed with one goal in mind: to help you secure instant funding through Campus Fund and achieve your first profits as quickly as possible. Our globally unique ecosystem offering instant funding and comprehensive education is designed to support you in achieving your goal of becoming a consistently profitable trader for life. Thank you for being part of our mission to transform the industry. I look forward to seeing you in my Funded Trader Weekly Outlook, wishing you successful and safe trading.